Most of the time, though, the president doesn't have much impact on the stock market, at least not on a day-to-day basis. The last president rarely got involved in the markets, except when one of Biden's aides drew up a list of our friends to determine which companies could get NVIDIA's latest chips. His regulators tried to block virtually every merger, too. But the White House itself wasn't regularly moving in the market. The White House, see this? They were oblivious to this place, believe me. Even in President Trump's first term, he didn't directly try to move the averages, except when the economy froze up during COVID. This time, though, Trump, too, is so different, it's crazy. From trade policy to tax policy to capital return policy or military policy, ramifications to the stock market are more important than anything other than the direction of interest rates, both the long rate set by the bond market and the short rate set by the Fed. And remember, Trump wants to set those, too. There are huge stock market reverberations to almost everything this president does, and I think he knows it. I remember when he called the bottom after Liberation Day fracas, literally by posting on Truth Social that it was time to buy stocks, a great time to buy. David Faber and I were on the desk trying to figure out dispassionately what could happen. Well, it turned out the president was right. It was an amazing buying opportunity. Which brings us to the Greenland imbroglio. The president has been stewing over this Greenland issue for a while. We have a lot of history with Greenland. There's a huge U.S. Air Force base built during the Cold War. It's very important to our nation's defense. Some might argue that we should have sovereignty over such a critical base. But Denmark's a member of NATO, and we run NATO. Until very recently, it might as well have been on U.S. soil. But this president doesn't respect Denmark or NATO, for that matter. He seems angry at the whole of Scandinavia because he lost out on the Nobel Peace Prize. Look out, Oslo! Enough of the history. Yesterday, we were concerned that Trump might decide to take Greenland by force. The notion that we would actually go to war with our allies over Greenland, of course, was totally absurd. But because this president is willing to use pretty much anything in the U.S. arsenal to get his way, from tariffs to bombings and kidnapping world leaders, sellers took control of yesterday's session. They were scared. Normally, you expect interest rates to go down as people seek the safety of treasuries. Not this time. NATO members own about $3 trillion worth of U.S. bonds. Why they would hold them if they're worried about the United States declaring war on them? No, not going to happen. So sellers swarmed in, dumped treasuries ahead of the pending U.S.-Denmark war. When rates shot up, we saw a frantic move out of high-price to earnings multiple tech stocks, as well as anything related to housing. That was really yesterday's market. The latter is brutal, by the way, because there had been hope that the president was going to authorize buying mortgage-backed bonds to bring down rates. Yesterday looked like that looked like a goner. So even though D.R. Horton, the largest home builder, reported a pretty good quarter, stock got crushed. That was on Greenland. Today, though, we got to take the Greenland worries off the table, not just the possible invasion, but also the threat of tariffs, and Horton then screamed higher. So did Home Depot, which jumped $9.53, or 2.5%. That was the Greenland peace dividend. Of course, not everything went right from the stock market's perspective. The president's also decided to prohibit corporate home buying, something he thinks is needed to get housing prices down. He signed an executive order banning it. Of course, I don't think he has the authority to do that. But like with the tariffs, neither Congress nor the court seems willing to push back or even care. And he reiterated the 10% cap on credit card interest rates, something that I believe would be an economic disaster because the credit card industry would just stop lending. J.P. Morgan's Jamie Dimon told us that. Still one more area where the congressional action is needed, but you go tell Trump that. I'm not going there. In this world of presidential intervention, you need to know two things. One, the president is the best bully pulpit in the world. And two, he can go to war, but the war only ends. Tonight, we have Joe Wolk, the CFO of Johnson & Johnson, giant pharmaceutical company. The president ran, among other things, on lower drug prices, and then he got them. He also ran on reshoring, got that too. Then it ended, and these drug stocks have had a sensational, well, let's say, run after the peace dividend. Joe Wolk will explain that to us. Is the president's bark worse than his bite? He certainly does a heck of a lot of barking. You can't help that. But you have to try to figure out whether the worst case will really come true. This time, the worst case was an invasion of Greenland. You have to ask yourself if the president's threats are too outlandish to really happen. In this case, the bond market rebelled, and because the president doesn't want to wreck the economy, he changed his mind. He's given you so many buying opportunities in this game of international domestic chicken since he took over that all you got to do is just got to wait for the hot ones and then do some buying. But what really matters here is that you never know when the president and his team are going to strike or what sector will be hammered. Only fossil fuels and the derivatives seem to get the president's unmitigated backing, unless, of course, they're unwilling to pitch in on that Venezuelan rebuild. So here's the bottom line. My goal on this show is not to judge, it's to profit. Unlike the first Trump administration, Trump, too, is far more comfortable taking the market down, not up. Just be ready. You should get plenty of good buying opportunities.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.